There is something spooky going on in the market right now while it's making all-time highs, and it's not even Halloween. You're going to want to watch the entirety of this video because you're going to learn a skill with investing that will help you make a ton of money. Welcome into Financial Freedom Builders, where every conversation moves you one decision closer to financial freedom. If you haven't already, hit the like button, subscribe to the page. The top comment below gets you access to the 10x challenge. For those of you that don't know what the 10x challenge is, I'm going to take a quick moment to explain. We have started a journey as of July 1st where anyone who is interested in multiplying their initial investment tenfold can join us on this challenge as we make different trades and navigate them that will ultimately on the other side allow you to see a 10x gain from your original investment. People are already 50, 60, 70, 80% of the way in. People have paid off cars, paid off school loans, have had emergency savings fully funded. Things are happening, and this could be you. So the top comment below gets you access into it. But let's talk about what's going on in this market. So up until recently, and I'll leave this video right up here, the S&P 500, which is measured by the SPY, ticker symbol SPY, recently had a wall of resistance, basically like a ceiling in the room, of $758. And then just a few days ago, we revisited finally $758. And in a matter of 2 or 3 days, we have jumped from $758 on the SPY to as high as $776. Now, most times, when the market is climbing higher, there is usually a reason why there is bullish momentum going higher in the market. So as we start to unpack and peel the layer behind to understand what's going on, this is where you need to watch the remainder of this video. The first thing, one of the catalysts that could have come up was that recently Citadel Securities came out and said that they are not predicting any rate hikes at all for the remainder of the year. That is a potential catalyst to send the market higher. However, literally just 1 week ago, this same company dropped in the social media a tweet saying that they expect at least 2 hikes the remainder of the year, and that the last FOMC meeting that just happened about a week ago, they were already factoring in a 25-point basis hike. So in a matter of a week, we went from potentially 2 hikes to no hikes. Based off of what? So that's point number 1. So now it starts to wonder, it makes you think, why is it that something has suddenly changed that now there is no rate hike? Okay, the next one. Another reason why the market could be climbing higher. Earnings across the spectrum have been better so far through Q2. This could very well be one of the catalysts sending the market higher. Except within many of these earnings reports, we are seeing record levels of capital expenditure going on the books for a lot of these companies due to AI. And so expenses are climbing, revenues are going up, but maybe not as fast or as high as investors were anticipating, and yet we're seeing the market continuing to climb higher. The next thing, we see that we still have a war going on with Iran, between the United States and Iran, and up until recently now, there is potentially a ceasefire or a memorandum of understanding that could be in place to stop all factors of the war for a period of time, so that the United States and Iran can continue ongoing negotiations. But we have seen this already happen several times over the last 6 months, that this administration in the United States has decided to be in this war. And all the other times, these peace treaties or ceasefires only lasted for a few days max, and then it was unraveled, and then back at it, full-fledged, back with strategically or silent wars, but conflict continued. But now, because it happened again, we're seeing the market suddenly react higher. So what has happened now is, and this is where, for those of you that stuck around, here is a technical analysis lesson I'm going to teach you that's going to help you become a better investor. Because of all of these factors, that are swirling around, we now see a rush of individuals buying the stock market again. And now the S&P 500 on what's called the strength index, also known as the RSI, is now somewhere north of 75 on the daily time frame. Now I'm going to take a quick station break to explain RSI, and then I'm going to tell you what will you do with this information if you are interested, although this video is not financial advice and is for education and entertainment purposes only. The RSI measures the momentum of a particular stock in review based off of whatever time period you're looking at. So the more momentum you get on a stock, the higher the RSI. The more selling you get of the stock you're reviewing, the lower the RSI. Rule of thumb is that usually above 70 on the RSI, you are overbought, which means that too many people are buying too much, too fast of whatever stock it is. Rule of thumb is below 30, it's oversold, which means too many people are selling too fast and it's happening too quickly for what the actual value of whatever the stock is at that particular time. 50 ends up being usually what's called the point of control. So as long as it stays in the 50, it's relatively neutral. But as it starts climbing to 70, that means that the stock is normally bullish. As it's moving towards 30, it's normally bearish. So when something is overbought, when it's too hot, it needs to cool off more often than not. And then usually you see some sort of a short-term or impending correction to bring it closer towards the zone between 70 and 50 if it's bullish, or 50 if it's neutral, or if something is completely bearish, it'll work its way down to 30. It works the other way on the bearish side when it's oversold. When it is in 30, usually that means that it's sold too much. It's due for a bounce up, at least between the 30 and the 50 zone. Otherwise, you will see it back to 50, or it may be a full-on reversal back towards 70. Now, going back to what we were just talking about earlier, on the daily time frame, in the RSI is at 75, which means it's too much, too fast on the S&P 500. So what that tells me is that whoever wanted the momentum in the stock market to occur has already gotten everyone's attention. So from here, we now need to see what is going to eventually be, in the short term, a pullback. Now, in the beginning of the I mentioned to you that the ceiling we were up against for the longest time is $758. So now we broke through the ceiling and kept climbing. So now when we come back to cool off, we now need to test what was once the ceiling to now see if it's going to hold and become the floor in the new room we are in, the floor above us. Which means that in the short term, although it's not financial advice, we are probably going to revisit $758 on the SPY, at least at some point within the next 2 weeks. Now, the S&P 500 measures the top 500 companies in the United States, which means that if we're going to see a pullback from 776 back to 758, that means many of your favorite large cap stocks are going to have to come down with it. And it will be up to you to identify which ones are primed for a pullback, because not all stocks are primed right now for a pullback. Some of them have already pulled back and are going to be going up while the other ones are going down. Now, if you appreciated the information and the education we provided on this video, on your way out, all we ask for is for you to hit the like button. Make sure you subscribe to the page. I would hit the notification bell so you're alerted the next time we drop a video like this. And then, of course, share this video with someone you know, because they're going to need this information as the market takes an impending pullback, which is what we're ultimately forecasting. And then also, I would encourage you in the comments below, 1, access the 10x challenge. And then number 2, let us know your thoughts. Maybe you think otherwise. Maybe you think the market should continue to keep climbing higher. So if you do believe that, we would love to engage with you and get your assessment. and then we will see how this thing plans out over the next 2 weeks. But it's always important when it comes to investing, you always have to have a plan. So at the minimum, we're presenting you our plan, and we'll talk to you on the next one.